What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is September 17th of 2017. Well, folks, it's time again on this channel to share with you all one of my favorite trading tips to take on in your investing and trading journeys in cryptocurrencies. It's not only one of my most favorite indicators, but is one of the most common indicators used by traders and investors around the world in a variety of different markets to spot trends before they happen. And it's no other than the MACD. So I'm going to show you all the basics you need to know, how to get it set up on your chart, how to interpret the MACD at its core, and also how to use it to spot trends before they truly happen in the market. So let's go ahead and get started. First off, we're going to go here to the Indicators tab, and depending on what trading platform you use, it really doesn't matter because you should find the MACD. It's one of the most common indicators, as I stated before, and it should be a simple search for the MACD. So once you've got it placed on your chart, we're going to go here to the full screen. And before I really get into details as to what the MACD is, I really want to explain that the MACD is best used on the daily chart, okay? It's all right to use it on the 5-minute or the hourly, but it's not as powerful as the daily, as well as the weekly and the monthly for more long-term trends. So now that we've got that settled, we're here on the daily chart for Bitcoin. Let's go ahead and take a look at the MACD indicators. We can see it's printed down below on the screen, as it usually should be. And we can see that there's 3 components that make it up: the pink bars, the orange line, and the blue line. Now, it might look like different colors for you, but the indicator itself will not be different on different platforms. So let's go ahead and talk about what the MACD is at its core and how we can really interpret each part of it. So there's 3 different components to it. The blue line itself is the 12-day exponential moving average. It's a little bit different than the SMA. And then we also have the orange line, which is the 26-day exponential moving average. So these 2 lines cross against one another and sometimes have what's known as MACD crosses, and we'll talk about that in a minute. The last component, though, I want to talk about is the pink bars. And the pink bars are an indicator to determine the distance between the blue line and the orange line. And when the orange line orange line itself is higher above the blue line, you can see that the pink bars go under. When the blue line is over it, the 12-day exponential moving average, you can see that the pink bars are up, okay? So I'm going to explain what this means and how you can utilize it. So when we see crosses on the MACD, when the 12-day exponential moving average as well as the 26-day exponential moving average cross, that's what's known as a MACD cross. And there's 2 ways that can happen: either the blue line going under the orange line or the blue line coming up from under and crossing the orange line. So what does that mean? How can we use it in our trading, and how can it become really powerful in spotting trends? Well, let's go ahead and look at the past kind of pullback in Bitcoin's price action that we saw back during June and July. We could see that as we were going up, the MACD held strong. You want to see generally in an uptrend that the blue line, in this case, the 12-day exponential moving average, stays generally above the orange line, the 26-day exponential moving average. And you can see that during this uptrend, it held quite well, and the price action was pretty bullish. It held its trend for quite some time and had a great run-up. However, when this red candle came through, the next few days of sell-off really came through, a little bit of fear came into the market, and we can see that the MACD had a cross to the downside. Now, of course, you might see that the MACD is high up here and everything, and this can be a good indicator that sometimes markets are a little overextended, okay? So we can see that as it came down, it had a little bit of upside to the price action, and the blue line tried to maybe try and get back up against the orange line, but it couldn't. And we could see that the MACD was losing its momentum. And when it got to around here, we could see that the blue line, even though it had gotten closer, started to diverge off and go to the downside. Now, when you see a long drawn out kind of period where the MACD is in general losing its momentum, and you see the 12 EMA under the 26 EMA, that's usually a sign that we're in either a bear market or at least pullback phase. So the next thing you want to do is most likely cash out of some of your positions, maybe play some hedging devices against the general asset, in this case Bitcoin, and you want to wait for the pullback to come through. Now, of course, as we were talking about on my channel when we were up here, I said to get out of Bitcoin because I could see clearly on the MACD wasn't showing signs of confidence as well as my other indicators. So once we had the pullback though, we could see that eventually we had a MACD crossing. Much like we had a crossing up here, we had the opposite down here. The blue line, or the 12 EMA, crossed against the 26 EMA with this big candle. Now, that doesn't signal an instant, okay, let's buy into it. That's not how the MACD works. It's not guaranteed of anything. What you want to see with the MACD is a continuation of the blue line, not only trending slightly upwards, but holding above the orange line in this case, the 26 EMA. And we saw that. We didn't see the blue line cross back over and signal a failed confidence on the price action. No, it held above the orange line. It was able to stay above the 26 EMA. And because of that, that shows a sign of confidence. And you can be pretty solidified in knowing that buying at these levels around here might be a good buy and that the uptrend is most likely to continue. And voila, look at that. It didn't cross under the orange line and continued higher to new highs for Bitcoin. So, again, it's a very powerful tool. And you can also see, as we looked over here, as I was signaling to you all as we got around 5,000, that there was a little bit of toss-up between the MACD. And when you see this sometimes, especially in an overbought market, you can see that sometimes it means the market's a little overextended. And the numerical value up here as well can be a good indicator for that. It can show that if it's on the higher end, markets are usually a little overbought. Maybe you should start cashing out some of your positions or start hedging against the device that you're currently looking at. In this case, we were looking at Bitcoin, and we saw a pretty dramatic sell-off. Now, one thing to keep in mind here, we can also be fair in a sense and say, look, the MACD itself, using the pink bars, we can see that the divergence between the two is pretty strong. So this could mean that markets were oversold, and quite frankly, we saw a really solid rebound the other day because of it. So you want to buy when the MACD is pretty divergent against both of the EMAs. That's a good sign as well that markets can be oversold, just like how they can be overbought over here. So again, you want to look when the MACD is at low momentum levels, but at the same time we can find that crossing. So you want to get it on the lower end, just like how you would buy low, sell high. And again, you want to make sure that you have that price strength confirmation before you make any big buys, where you can see the 12 EMA staying steady above the orange line, which in this case is the 26 EMA. So that's generally how you use the MACD. There's all kinds of different strategies to it, but generally speaking, in the world of crypto, if you understand those core fundamental principles of the different moving averages inside the MACD and how to really use the MACD at its core, then you will become a much more powerful trader. And you can spot these long-term trends comparative to just trying to trade after a day or two, or just trying to guesstimate in the market when momentum's coming back in. The moving averages in this indicator are very powerful, and they can provide a really good indicator that, look, markets are ready to continue moving up, or they really don't have the gas or the strength to keep on pushing up, and they might need to correct a little bit longer. So I want you all to keep an eye on this indicator, and I want you to use it in your trading strategies. It'll help you stay ahead of the game, as we always try to do here on this channel, and it's a very powerful tool. There's a reason that it's used by multiple traders and investors across different industries and markets. That's it for the video, folks. I hope you all found this enjoyable, and I hope you will start using the MACD on your trading strategies. My name is Nicholas Merton here at DataDash, and I'll see you all in the next video. Stay tuned.